I'm Adrienne Klaas, a development finance editor of The Banker magazine, and I'm reporting from the World Bank IMF annual meetings here in Nusa Dua, Bali, Indonesia. And I'm here with Salman Jaffery, Chief Business Development Officer of the Dubai International Financial Center. Salman, thank you so much for speaking to me today.
My pleasure.
You've had a strong year at the DIFC, a lot of growth. Talk to me a bit about your strategic priorities going forward.
So we've had another good year. It comes on the back of what is a 10-year strategy that we rolled out back in 2014. And I'm happy to say that we're on track. The 3 or 4 pillars of that strategy included getting to 1,000 regulated firms. It included bumping up our balance sheet to $400 billion. It included aspiring to get to $250 billion in assets under management, and of course, continuing DIFC's and Dubai's leadership in Islamic finance. And across all of those metrics, we are tracking very well, and we expect this year to be another record year, much like the last 3.
Now, in terms of fintech, what kind of developments are currently taking place? What kind of companies do you see up and coming within DIFC?
What we aspire to do in fintech is similar conceptually to what we did with traditional finance, which is, we're 14 years old, and we represented kind of a revolution of sorts of innovation in as much as we were able to aggregate capital and talent in a region to create, the region's largest financial market. What we want to do is do the same for fintech, and the last 2 years we've seen a lot of developments. So for example, our regulator, the DFSA, developed a platform or a regime for peer-to-peer lending on the equity side and on the debt side. They created what is one of the world's probably leading sandbox concepts called the Innovation Testing License, enabling firms to come to the market and try new concepts within the safety and security of the regulator's environment. And then the third thing that we did is we developed the region's first, and we think the best and the largest fintech accelerator. So this year is the second year of that accelerator. Last year we had something like 11 or 12 people in the cohort. This year we're up to 22. Number of applications tripled this year. We had, I think, 315 applications, from which we picked 22, covering fintech, insurtech, regtech, and Islamic fintech. And last but not least, last year we announced the formation of a $100 million fintech fund. So our thought was, not only do we want to promote fintech by promoting talent and gathering people in the center, in the ecosystem, but also put some money where our mouth is. And that fund is being assembled as we speak.
Now, in terms of Belt and Road activity, so this is a major Chinese-led infrastructure initiative spanning much of the globe. There has been some activity related to that happening within the DIFC. Can you talk to me a bit about what that looks like?
Absolutely. It's worth providing some context. So first of all, China and the Chinese are not kind of foreign to the region. There are something like 250,000 Chinese in the UAE, the vast majority in Dubai. There's something like 4,000 Dubai-based Chinese enterprises. The world's largest wholesale center outside of China is in Dubai in the form of Dragon Mart. So the Chinese business and the Chinese community is very much part of the fabric of UAE and Dubai. Secondly, China is the UAE's largest trading partner. And the relationship between the UAE and China has never been better. And thirdly, therefore, the Belt and Road Initiative for us, for the UAE and for Dubai DIFC, is not just a slogan, it's a very, very real program. So what do I mean by that? People talk about trade right now and what's happening with the US-China trade. Well, the data hasn't changed. The Chinese still are on track for something like a $330, $340 billion trade surplus. And those excess dollars are being put into Belt and Road initiatives and infrastructure investment, and a lot of it's coming via the DIFC. We have the big 4 Chinese banks. They all are branches. They all deploy capital from the DIFC. And they're deploying money in big projects in the GCC, in MENA, in Africa, in Pakistan. So the DIFC is very much at the center of these trade and investment flows, and so Belt and Road is a really key piece for us.
Lastly, since we are at the IMF World Bank meetings, one of the big themes this week has been discussion of a lot of the turmoil that has been rippling through many emerging markets. I don't think we're yet at the point of calling it contagion officially, but there are some worrying signs there. Given the fact that many of the investors that are coming in and have capital flows through DIFC, what's your outlook in terms of how this might impact your business?
So we had a really good discussion on yesterday's panel about emerging market capital flows. Look, the reality is that the last couple of years for emerging markets, particularly for publicly traded equities and fixed income products, have definitely been turbulent. But from our perspective, being in the emerging markets, we have a slightly different view, which is that, again, as of today, the data is very strong in terms of the fact that we are in the middle of 4 hours flying time from the world's largest markets in terms of population, in terms of young demographics. We are also within 3 to 4 hours of flying time of the world's biggest consumer of infrastructure finance. So Africa, South Asia, MENA, all over a 20-year period are going to require significant capex in roads, bridges, hospital, education, financial services. If you take that investment horizon, the short-term fluctuations in flows, in some sense, in some regards, don't really matter. We are bullish for the long run, and that's kind of why we exist in terms of intermediating flows of capital to these markets.
Well, Salman, thank you so much for speaking to us today.
Thank you very much.